Hi, I'm Seema Shah, Chief Global Strategist at Principal Asset Management, and these are some of the key themes for our Q4 Global Market Perspectives. Back in April, just after Liberation Day, there were such concerns about global growth, and in the event, it's been considerably more resilient than anyone had been anticipating. And the main reason is that tariff policy volatility has receded, and that's enabled small and large businesses to go ahead with their capex plans, and we can see that quite clearly with the AI-driven capex that's come through. For next year, as well as seeing monetary policy stimulus, we'll also see some fiscal stimulus come through in the US, and that should help drive global growth higher. By the end of this year, we're expecting to have seen 3 rate cuts in 2025, as the Fed responds to that slowing labour market. At that point, Fed funds rate should be close to neutral, which should give the Fed an opportunity to sit back, pause, and appraise the economic situation. And then maybe we could see 1 or 2 more cuts in 2026. That cautious approach is going to be really important because we're still expecting inflation to be above target through the whole of 2026. It is also worth remembering, though, that given President Trump's preference for a more dovish Fed, we could see the rate decisions end up slanting a little bit more dovish, even if the macro backdrop just doesn't warrant it. This year, we've seen gold surge through record highs, and much of that has been driven by investors looking to hedge against US policy uncertainty as well as rising inflation risks. And some of that can also be reflected in the demise of the US dollar. Now, for next year, we are expecting some further dollar weakness, not much, but really driven by the fact that there will be increasing interest rate differentials with global central banks essentially coming towards the end of their rate cutting cycle, just as the Fed is starting to get theirs going. Equities have had a pretty good run this year. There are some concerns that valuations are very attractive and so the equity market is due for a pullback. However, the macro backdrop is still very constructive. Growth is fairly robust, and then in addition to that, we're going to have some Fed cuts which will juice the market. In addition, and really supportive, is going to be this continued narrative of AI-driven capex. So for 2026, AI continues to be a very significant opportunity for investors, but in addition to that, we should be looking at small caps. They typically benefit from a robust domestic backdrop and rate cuts, and that's exactly what we'll be getting next year.